Welcome to Zoom Out Bitcoin, the channel where we take a step back, zoom out, and look at the big picture involving Bitcoin. Today, I want to make a video about what I believe the most important hurdle to Bitcoin in the immediate and near future is. Over the last 10 years, I've seen the price of Bitcoin at $20,000. People ignored it, acted like it didn't even exist. At $40,000, they wrote it off as gambling and internet jokes. At $60,000, those people were outraged that these unsound investments and unsound investors were making so much money. At $80,000, a lot of that noise quieted down as people began to ask themselves, could I have been wrong about this? And at $100,000, I've seen people begin to become cautiously optimistic and actually reach out and begin asking questions. The number one question I've gotten, and what I believe the biggest hurdle for larger scale Bitcoin adoption for the future that I imagine in our economic system, is what is Bitcoin? What does Bitcoin even do? Before people can begin really diving into this subject and really looking at investing in Bitcoin and talking about whether or not it's right for them, people need to get past and understand what the asset actually does. That's what this video looks to answer. In order to answer this question, the first thing you have to do is pose, what is the problem that Bitcoin represents a solution to? This is the modern day fiat currency and fiat market system. A fiat currency is a currency that is backed by nothing more than the full faith and trust of the government that issues it. These currencies are the US dollar, the euro, the yen. Almost every single nation state and government issues their own form of fiat currency. As almost everyone holding fiat currency since 1971, and especially in the last 10 to 20 years, have noticed, they've noticed their buying power decrease over time. They've noticed that goods and services that they want to purchase keep getting more and more and more expensive. Everyone understands that this is due to inflation. But what isn't talked about is that inflation isn't something that comes around once in a decade. Inflation isn't an accident. Inflation is something that is intentional and consistent. The Federal Reserve of America sets a target inflation rate of 2 to 3%. This means inflation's not going anywhere. As long as we want to play by the fiat game, the rules are our purchasing power will be decreased. Inflation is guaranteed. It's only a question of how rampant it gets and how quickly. This is what Bitcoin poses a solution to, is how do you fight this constant devaluing of your purchasing power year over year over year? It does this by being a store of value asset. So what is a store of value asset? A store of value asset is fundamentally an asset that you buy at one point in time with some amount of purchasing power, and you hope to sell it at a later point in time and retain that same amount of purchasing power. The best example of this is in 2000, if you wanted to buy a car and instead you bought enough gold to buy a car. So take the modern car, say it was worth $5,000. You bought that much in gold. The idea of a store of value is that in 2025, when that $5,000 car may cost $45,000, $65,000, $35,000, the amount that you bought in gold has remained approximately equivalent, such that you could buy a modern car with however many ounces of gold in 2000, and that same number of ounces of gold can also buy a modern car in 2025. This is the concept of retaining purchasing power. This is how you fight the constant inflation that is occurring and the constant devaluing of the dollar that we've seen over time. Common store of value assets are gold, as I mentioned previously, but also things like real estate, watches, paintings, stocks, anything that is relatively finite and hard to mass produce, anything that it's difficult to go out and duplicate and easily create large amounts of it or mine large amounts of it. These types of items have found themselves to become store of value assets, where people park their wealth in it with the idea that 20 to 30 years down the line, they're able to access that without losing value. This is the group of asset that Bitcoin tries to put itself into. When someone says, what is Bitcoin? That's the answer. It's a store of value asset. But most people have the obvious question of, all of those items are tangible. They do something in the real world, and Bitcoin's a digital asset. How on earth could Bitcoin be a store of value asset? In order to address that, we need to look at what actually makes something a store of value asset. I believe Saifedean Ammous does a very good job of describing this in the term of sellability. Sellability is fundamentally the ability to sell something. Whenever you look at being a store of value asset, the concept is that you're able to purchase it at one point in time, and sometime in the future, you're able to sell that for the same amount of purchasing power that you put into it. The key component of that is the ability to go out and actually sell the asset. If it's not sellable to people, you won't be able to get the value from your store of value. This sellability, the ability to actually sell goods and services, the ability to sell an asset in response and get back things that are produced and things that are valuable, is broken down into three components: sellability across scale, sellability across space, and sellability across time. First, sellability across scale. This is essentially how divisible is your asset. If you were to imagine that you have an asset and you want to get goods and services out of it, you want to be able to devise your original store of value asset into exactly the amount to have a fair value transaction. An easy way to visualize this is if all of your money, if 100% of your money is tied up in a beachfront Miami property worth $5 million, and you want to go to the coffee shop, the local Starbucks, and get a mocha, you're going to run into a situation where you can't sell a fraction of that beachfront property to pay for your $5 coffee, for your $10 coffee. This is a good illustration of sellability. Most physical assets run into this problem. If you want to sell the asset, you have to sell the entire thing at once, which means you're only trading into something of equivalent amount, or you're trying to trade into something lesser and trying to get a basket of goods that add up to that same amount. This poses problems whenever you want to actually transfer this into goods and services that you want. Next is sellability across space. This is fundamentally the ability to sell an asset across a given distance and how much space it occupies in the real world. I believe silver does an excellent job of illustrating this. If you are a customer in America who wants to buy $1 million of semiconductors from Taiwan, and you want to use silver and the company in Taiwan wants to accept the silver, there's a logistical problem of how you're actually going to get $1 million of silver across the entire nation, across the entire globe to Taiwan. Just the cost in transporting it alone, as well as this potential security risk and the time it takes to transport it, totally discues the value of the transaction. In addition to this, even if the Taiwan company was willing to accept the silver and you could magically transport it there, $1 million of silver is nearly 1,900 pounds of silver. You can imagine very quickly that large amounts of money stored in physical assets like the silver take up very large amounts of space. If Apple, for instance, as a multi-trillion-dollar company, wanted to store all of its value in silver, there becomes a real space constraint on how much space they're actually able to store the silver in. This is the concept of sellability across space. Third is sellability across time. This is most important for understanding inflation, and it is the idea of confidence in the ability to sell the asset at a future date. If you imagine a cattle farmer that has all of his money tied up in cows, you can understand that he is not able to be confident in the ability to sell that cow 5, 10, 15 years down the line. So sellability of time is important for actually being able to believe that there is a store mechanism to your store of value. Sellability of time is broken down into three key components: physical degradation, maintenance cost, and supply. First is physical degradation. This is really two main components. The first one is natural disasters. And they don't have to be large-scale natural disasters, but things as simple as flooding, fires, hurricanes. We've seen recently in California that large amounts of wealth that is tied up in real estate was burned nearly to the ground. It is hard to have a long time frame on assets that pose a severe risk to being wiped out from tornadoes, flooding, weather, natural events that you can expect to occur, especially over very long time frames. The next is the human component. People are constantly cheating, lying, stealing, and losing assets. Every year, trillions of dollars are stolen or made fraudulent through the modern day system. This is another form of physical degradation where if you can expect your asset to actually be stolen, it's hard to plan out for the future. Second is maintenance cost. This is the actual financial burden tied to maintaining your asset over a period of time. A great example of this that I believe a lot of people overlook is real estate. A 2% property tax on real estate means that you are going to be paying the principal investment once every 40 years. While 40 years seems like a long time, if you're thinking about a store of value in terms of 120, 200 years, which I understand is outside of our lifetimes, but even within our lifetimes, within 80 years, you don't want to retain your value in an asset where you're going to pay the principal amount 1, 2, maybe 3 times after you account for tax reassessments. In addition to this, you have security and overhead. The modern day banking world illustrates this perfectly. You are charged nearly 2 to 3% on every single transaction you occur. That is pure overhead that is required for banks to actually transfer and finalize these transactions. In addition, most people who have jewelry or very important physical assets like gold or silver or diamonds, they will pay for security. Whether it's on a small scale and they get a vault in their personal house that costs money that will degrade over time and you have to replace, or if it's on a very large scale where they will actually pay an entity to have 24/7 surveillance, to have cameras, to have security guards. This security also costs money. This is added into the maintenance cost of the asset and needs to be accounted for when you look at storing value in an asset that has a consistent financial fee to store it. The third is supply. This is most closely tied to inflation. Inflation is fundamentally caused whenever there are more currency or asset units chasing the same number of goods and services. An easy way to visualize this, and my personal favorite, is with the game of Monopoly. If you knew that every 4 turns, someone from outside the game was going to come in and give every single player $500, how would you change the way in which you price the properties, the utilities, the houses, the hotels? You would know that first off, you have more money right now, so you can pay a higher amount for it. But second off, you know that more money is coming in the future. So you can actually overpay today because you know you're going to get more currency, more money in this case, later at a later date. This is how the constantly expanding supply is actually what causes the inflation that we see. This is why prices are always going up, is because new money is constantly being created and printed and added into circulation. So what is Bitcoin? Bitcoin is a store of value. But what does Bitcoin do? Bitcoin is the only purpose-built system specifically to address being a store of value. Every other store of value that we've had has gotten there coincidentally. Gold was not originally created. Quite frankly, people didn't create gold at all. Gold was not made to be a store of value. We stumbled upon it. Houses were not made to be a store of value. We stumbled upon it. Almost every store of value that we've used thus far just so happens to have fit some of the criteria and given us protection against the inflation and constant devaluing that we've seen. Bitcoin is the first asset that is built intentionally to address these concepts of sellability. And I'm going to address how. So first, sellability across scale. Bitcoin is divisible into 100 million units called Satoshis. This means that even if Bitcoin was worth $1 million, you could divide it down into a single penny. This allows you to, even at a 5, 10, $25 million Bitcoin, you're still able to subdivide it into units where you can buy a gumball or a popsicle. At the same time, you can also buy a coffee, a house, or a beachfront property. Bitcoin perfectly addresses the concept of sellability of scale. Next is sellability across space. The modern fiat system addresses this very well. You can transfer money electronically from one bank to another bank. Bitcoin takes this a step further. Anywhere in the world, anywhere in the universe as far as that's concerned, that has internet connection, access to electricity, and a computer is able to transfer Bitcoin. But Bitcoin's borderless. It can go beyond regulations. Banks must choose to accept the currencies, and you're at the whim of whether or not the receiving bank will accept your nation's currency, your nation's rules and regulations. Bitcoin goes beyond this. You can truly transfer anywhere in the world, beyond borders, beyond regulations. If someone has internet access and they want to receive your Bitcoin, it will happen. In addition to this, the time it takes for the modern financial system to finalize transactions is anywhere from 3 to 7 days. Bitcoin, the maximum time it takes to finalize a transaction is 10 minutes. Bitcoin is the most sellable asset across space that we've seen in the modern world. Next, sellability across time. This is absolutely at the core of what makes Bitcoin such a purpose-driven store of value asset. First, physical degradation. Bitcoin as a digital asset is completely impervious to natural disasters. It can't be burned, it can't be flooded, it can't be hit by a hurricane. Even if the computer, which your Bitcoin is stored on, is completely destroyed, your Bitcoin still exists. You just have to log in on a new computer and access your account. In addition to this, Bitcoin is intentionally made for it to be impossible to duplicate coins, steal coins, and be fraudulent on the Bitcoin network, completely removing the human element of fraud and theft. Cost of maintenance. The modern fiat system, as I've mentioned previously, has a 2 to 3% overhead on all transactions. Bitcoin, on the other hand, is a fraction of a percentage of overhead for any transaction. When you're dealing with massive transactions, especially across different nation states, this is a huge benefit. Bitcoin's cost of maintenance is essentially the cost of minimal electricity, which is essentially zero, and a fraction of a percent in order to finalize transactions, making it the cheapest cost of maintenance store of value asset we have to date. And finally, supply. Bitcoin is the only asset in the world to satisfy two components. Number one, it has a truly fixed supply. There's 21 million Bitcoin. That will never change. The developer of Bitcoin can't come out and change it. A president can't come out and announce it to be increased or decreased. It doesn't matter what happens. It doesn't matter if people buy Bitcoin. It doesn't matter if the entire world gives up on Bitcoin. There will be 21 million Bitcoin. That will never change. Second is the rate of change of supply for Bitcoin is predetermined and absolutely set. This means that it is the only asset that I know of that you can look into the future and say, I know exactly the rate in which Bitcoin will hit the market. I know exactly the rate in which the supply will change. You can pick any date or time from now to the end of time, and you can calculate exactly how many Bitcoin will be in circulation without fail. These two components make Bitcoin the hardest asset to ever exist. It doesn't matter if the price goes up. It doesn't matter if we improve technology. It doesn't matter if more people want to mine it or less people want to mine it. The supply of Bitcoin will not change, regardless of what we want or think or say about it. This is what makes Bitcoin, in my opinion, the most unique and interesting asset in the world right now. So I'll go back to the original questions. What is Bitcoin? A store of value. What does Bitcoin do? Bitcoin is an asset that you can buy today and you can sell at a future date and time, whether it's 5, 15, 25 years from now. You can sell it across borders, anywhere in the entire world without threat of regulation, without threat of borders. You can sell it at any scale. You can buy a cup of joe with it, or you can buy a beachfront property, anything you want at any scale. You can do it with no threat to physical degradation. You can do it with no threat of someone stealing your asset in the meantime. You can do it with no threat of people cheating and lying on the system and having fraudulent behavior. You can do all of that while being able to calculate exactly how many Bitcoin will exist in circulation, chasing the exact same products and services you want. Bitcoin is a purpose-built system with one idea in mind, being a store of value. Bitcoin tries to achieve maximum sellability across every single asset, and to date is the most saleable asset we've ever had. I'm not making this video to ask you to go buy Bitcoin, nor am I trying to convince you to buy Bitcoin. I'm making this video because I want to address the initial question that a lot of people are having. What is Bitcoin? There are other questions that exist. Is Bitcoin going to succeed as a store of value asset? Will the volatility of Bitcoin affect its ability to be a store of value asset? Is a store of value asset even right for me? These are fantastic questions that I plan to make videos about in the future, but I want us to get past the first question. And my hope is that in answering one question, people can ask 5, 10, 15 more. This will continue the conversation and help us to better understand where we're headed, address topics like inflation, address topics like a store of value asset, help educate people, and we can all be better off for it. Thanks.